What is up YouTube, welcome back to the FFX Academy. So today's FOMC, or otherwise known as the Federal Open Market Committee. If you have no idea what is the FOMC and if you have no idea what's going to happen in the markets, I have some good news, because in this video I'm going to explain what is the FOMC and what things you need to expect today and what things you need to look out for. So if you're interested and if you're ready, stay tuned, it's coming. Right, let's kick it off with understanding what is FOMC, or the Federal Open Market Committee. Now, you should know already that the Fed, or any given central bank in any given country, has the mandate to control the money supply in the economy. And they can do so by using three different things: open market operations, discount rate, and the reserve requirements. So the Federal Reserve controls the three tools of this monetary policy. Again, open market operations, the discount rate, and the reserve requirements. Open market operations is the purchase and sale of securities in an open market by the central bank. Now, this is a key tool used by the Federal Reserve in the implementation of the monetary policy. This tool helps to adjust the supply of reserves and balances so as to keep the federal funds rate, or otherwise known as the overnight lending rate, among banks at the initial target. And in order to do so, they have a committee consists of 12 members, and they meet 8 times a year to discuss the health of the economy and the global financial markets, and make decisions on whether they should or how much they should purchase or how much they shouldn't purchase in open markets, to buy back all the securities. So as you can see, that every single tool by the central bank and the Fed is designed to control the money supply, and this is an indirect way to control the money supply in the markets. It's much softer than cutting the interest rates. If you're so fascinated about the FOMC and you want to read more to get into the nitty-gritty details of the FOMC and monetary policy, which is, it's a wonderful thing, you can go to federalreserve.gov and just search FOMC. It will be on the main page. Read up, it's really exciting. So looking at the economic calendar, you can see that in Central European time, the interest rate decision and the FOMC statement release will be at 7 o'clock Central European time, which means it's going to be at 6 o'clock UK time. Now, important to mention that the FOMC meeting is actually held yesterday, but the statement is given today. And bear in mind that they are carefully edit the statement, because these statements are designed to move markets, and these statements are designed to give forward guidance for the markets. And you can see that there is an interest rate decision at the same time, and also a press conference 30 minutes later. Now, interest rate, we know exactly that the Fed, or Jay Powell, is not going to raise or decrease interest rate because they chose tapering, which is a softer way. So Jay Powell in Jackson Hole actually announced or pre-announced that they're not going to fiddle with the interest rate because it's too early. And adjusting the interest rate too early can have detrimental effect on not just the US but the global economy. So once again, there will be no change in interest rate decision today. But what we're really looking for in the FOMC statement is when are they going to start the tapering and how much they're going to reduce the tapering. So it's a tapering, basically the quantitative easing of the asset purchases, and we want to know how much they're going to decrease the money pumped into the economy, because it's going to have a knock-on effect on gold. So for example, if they reduce the money pumped into the economy, there's going to be less dollars chasing gold, which means gold price should go up, because there's going to be, dollar is going to be a scarce resource. In a hypothetical term, so do not take word by word, because I think the amount or the rate they're going to reduce the money pumped into the economy via these asset purchases is going to be somewhere between, currently now they're releasing $120 billion into the US economy. If they reduce it by 20 billion, it's quite substantial, but if they reduce it by 5 billion, that's not gonna change anything. So once again, tapering is actually good for gold. If there's going to be a higher than expected amount of tapering, gold is going to skyrocket. If it's going to be in line with the expectations, well, there may be not that big change will happen, but if it's going to be less than expected, I would expect gold to drop a little bit and then continue its way to the upside. And remember that we have many other fundamental factors which pointing into the same direction that gold is going to go up. We have the global crisis looming again with the Delta variant. We have supply chain bottlenecks. We also have the commodity supercycle. I mean, look at all of the commodities. Oil is up 287%. Palladium is up 57%. And you know, any given commodity you look at is up by 4 or 5 fold than last year. So gold is not an exception, and gold is going to follow. If you look at any industrial metals, any precious metals, or any kind of commodities, I guarantee it's up between 20 to 200%. So gold should go up. Let's do some midweek analysis, guys. So currently it's 8:30 a.m. and gold is hovering just at my sell limit at 1779. So I sold it at 1780. And in the last 2 days, Monday and Tuesday, we had some really good buy opportunities. If you look left on the screen, I already put it out that what was the trade I posted into the AlphaFX members group. So we had some really good buy opportunities on gold, and also we had some really good sell opportunities on the Aussie dollar, US dollar, and some of the other pairs. So I do post daily setups and analysis for my members, and you can see the results. They're actually pretty good. Now going back to gold, what should I expect on gold? Right, I sold at 1780. And for 3 reasons. If you look left on the chart, you see that there is support and resistance right here. You can see that there is Fibonacci 61.80, and you can also see that there is a descending channel. So that isn't the nicest trend line I just draw on the chart, but you get the idea. Okay, corrected a little bit. So we already have 3 confirmations. I already have another 2 confirmations to sell, but I'm not going to tell it in the video. If you want to join the AlphaFX Academy and learn, the secrets of trading, you can go to my website alphafx.eu, link in the description, and join the academy. So anyway, going back, currently we have 4 to 5 different confirmations that gold is going to drop. Now, is it going to drop straight away? I don't think so, because gold is just started to creep up back to my sell limit. So only time will tell whether this level is going to hold. But the chances are pretty good that it's going to hold. However, you have to bear in mind that this trend line, this descending bearish trend line, is just a trend line. It's trend lines are there to be broken. But we also have the market structure. So the previous high was actually much higher, about $34 higher than the current price is. So which is pretty substantial. And in between, we have another well-known reaction level of the Fibonacci, or retracement level, which is a 7860. So I guess, or I ask the question, is it possible that price is going to go up to the 7860 at 1791 and then melt? Absolutely yes. And this is why risk management is important. This is why you should not risk anything more than 2 to 3% on any of the given positions, because if price comes back up to the 7860 level at 1791, that is a valid entry level again. Because if you look left on the chart, what if this trend line fails? Let me just change it. So anyway, so what if this trend line fails, and what if price comes higher to tap into the 1791 level? If you look left on the chart, you can see that it is still valid, because the market structure is still not broken. Even if price comes back to the 1800 level, market structure is not broken. And what does it mean? It's absolutely valid, and it's a good entry point to sell as we originally planned. So because the Fibonacci retracement gives us 2 entry levels, the 61.80 at 1781 and 7860 at 1791, both of them are possible retracement levels. And if you look left on the chart, just to recap, we have 1 support here, and also we have 1 resistance there. So there is always a possibility that price is gonna go up before it's coming down. Now there is a possibility that the price is just going to wake up and then melt. We don't know yet, time will tell. But if the price closes above, for example, the 4-hour candle closes above, you know, the 7860, now that's when you have to worry. That's when you have to start thinking about the contingency plan. Because what's going to happen after is, you see that we also have another trend line right here. And, you know, if price closes above the 7860, close to the trend line, and what if the trend line breaks? You have to start thinking about changing your mind into a bullish scenario, because who knows what is the FOMC meeting going to bring? What if they overshoot the expected target and they're going to reduce the quantitative easing with a bigger amount than expected? You know, price is just gonna shoot up straight away. But how you should trade it if price breaks all of these levels? It breaks the 61.80, breaks the 7860 and the top trend line. Why? You just have to wait for the trend line break and the market structure break. Wait for the retest and you're good to go for a bullish scenario. So once again, we have three levels, so 61.80, 7860, and the last resort is this level with this hypothetical trend line. If all of these three levels fails, you have to change your mind into a bullish scenario and you have to buy. But once again, to recap, this isn't what I'm waiting for, but that is just a contingency plan for you. What I'm waiting for is this level to hold, because if you look left on the chart, we have nice support and resistance, multiple confirmations, and I already have a sell position from 1780. So I'm expecting price to drop all the way to 61.80 or down to 1740. So guys, I need a favor from you. Please leave a comment in the video below, smash the like button and hit subscribe if you get any value out of these videos, so I know that I should continue with these mid-weekly videos. This is the Alpha FX.